Well, hello everyone. This is Ken Winans from Winans Investments, and I wanted to give you my critique of the current market situation and certainly things that we've been doing to help protect your portfolios. So first off, the volatility has been essentially caused by a 1-2 combination of the perceived economic effects of the coronavirus and the functional dumping of oil in the market by Saudi Arabia and Russia. Obviously, the underlying concerns is this enough to put the U.S. into a serious recession? The markets have been very volatile based on that fear. So while the media has really done a pretty good job of scaring all of us, including me, I wanted to give you some facts that might help you as you see what we're doing here and also that you can look as we go forward. People are making a lot of comparisons to 2008. But the simple reality of it is that there were two comparable stock market corrections in 2011 and 2018 due to geopolitical concerns, different than today's, but still very serious issues. What I find helpful in dealing with this is to realize that in both of those cases, the losses were made up within 7 months. So as soon as things stabilized, as soon as the Federal Reserve liquefied the markets, things move forward. Also, bear market bottoms are obviously very tough to call that exact bottom, but our long-term research shows this market is severely oversold. So, basically what that means is that we are somewhere near, or should be, based on historical standards, somewhere near a bottom. Also, many of the stocks, I know it's typical for us to call the stock market and to think all stocks act the same way, but the reality of it is that many of the holdings that we have bought have actually weathered the storm well. A good case in point would be utility stocks. Just looked at all the stock holdings this morning, and many of them have done much better than the market. Also, many of you have income investments in your portfolio. They have held up phenomenally well with just basically minor price declines. And the big reason for that is because they pay very high yields. And in addition to that, which we haven't received all the dividends or the bond payments yet for the year. But in addition to that, people do typically gravitate toward those kinds of investments during market volatility. So the prices of those kind of securities bounce back very, very quickly. So what have we been doing really over the last few weeks? Well, we have been raising cash levels in our portfolios. We've done this by trimming back up to 50% of a stock position on a case-by-case basis. Good case in point, companies that we think are going to have difficulties with what's just recently happened. Although we're going to track them going forward, but we're just trimming back on those companies because I'm not sure they're going to be in the leadership group when the rally kicks in. Also, a little bit too hard to explain in a short video, but we have placed in many of our portfolios inverse exchange traded funds that basically act as a hedge to, at the end of the day, minimize the volatility of an individual portfolio. So the idea of a hedge is if the market was falling 10%, a hedge portfolio might only fall 6 or 7%. So it's meant to try to dampen the volatility. Also, I'm looking ahead at an opportunity, and I'm trying to find the right stocks that will be the next rung in the ladder in leadership. So we're putting together those investments and watching those very close. A couple last points. I know this has been difficult for many of you. For many of our clients that have been with me for a long time, we've been down this road before. And remember that the primary job of a money manager is to find profitable investments in good times and to minimize losses in bad times. And I am very proud of our team. I thought they've done an outstanding job in working together through this. Anyway, please try to call. Obviously, it's very difficult to talk to all of you. If you'd like to schedule an appointment, I would suggest get your quarterly results, which will come out in about 3 weeks, and it'll be a good time to have a constructive discussion about where we are and see if we want to adjust the portfolio accordingly. But as always, I thank you for being a Winans client, and I hope you and your families are doing well. Thanks again.